Okay, hello everyone, and thank you for joining this video. So today I'm going to be looking at the DXY, all right, and I'm going to be focusing on a few things on the DXY, um, primarily because we haven't been getting consistent feedback from the dollar pairs. The reason for that is obviously, inflation, interest rates, um, the war, and all of these things. So, all of this obviously has an effect on the way foreign exchange actually moves. All right. So, based on that, we can sort of see after the first quarter, and in the second quarter, we are kind of seeing that okay, there's some stability probably coming back, and we can sort of see how the war has impacted foreign exchange. All right, but it all stems down to the chaos theory. So basically, stating that upon chaos is where chaos is the highest form of order. So that means that in the midst of chaos is where we obviously look for our opportunities. All right, so looking at the DXY on a monthly time frame, right? Remember, when I'm recording this video, it is a public holiday in the States, which is July 4th. It's their Independence Day. All right, so no current movements in the market at the moment because of the holiday. So looking at the DXY on a monthly time frame, right? So we understand that in order to take any positions on on any USD pairs, it's very important that we obviously look at the DXY. We look at how the DXY is performing, all right? Because remember that the DXY, right? If you have a USD, right, and whatever other pair we have here, right? The DXY influences the USD a lot, right? Because it's the dollar. So that's how the dollar, the DXY affects the USD, because primarily the USD is the DXY. So remember, this is our base currency, and then we obviously get a quote currency. So if the DXY increases in value, that means the USD will increase in value, which means in this pair we will see a reduction, right? So for this currency, so that means overall we should see an increase in USD. For example, let's say JPY USD, Euro, USD CAD. So whenever the base currency is obviously the USD, and we see an incline in the value of the DXY, we can then tend to say that okay, whatever pair has the USD as the base, we will probably see some sort of increase in value. All right, the same can be said for the opposite, right? Wherever we have the USD as the quote pair, so let's just say that this is some random currency, and then we have USD like this, for example, Euro USD, GBP USD. If the DXY increases in value, that means this currency is getting weaker, which means the overall movement would be this, right? If the USD was getting weaker, that means the base currency would get stronger, so we would see an uptrend. All right, so so that's how we use the DXY. So let's look at this, right? We can see that from a 2001, say 2002 almost era, we've had the DXY decline in the value, right? Now we need to understand that, say, okay, this is the highest that the DXY has been in for a very long time, right? Which means that it still has the potential to take out this swing high, right? However, it is still a very long time until we see that swing high being broken, right? So therefore we have to say, okay, we've come from a swing high, right? We've had a bit of a consolidation, right? Here is our consolidative phase, right? We have a couple of outliers here and there, and then we see a break out of this consolidation, right? Like so. And we now see that it formed another consolidation, like so, right? We have a couple outliers again, but that's not significant at the moment. And then we see the break of this consolidation, right? There we are, right? So I apologize for all the clicking. My mouse isn't working, so I have to use my trackpad, right? So this is what we're currently looking at. Now we see a break above the consolidative phase, right? Overall, what is this telling us? It is telling us that there is that expectation of the dollar to increase further in value before we see any further reduction in the value of the DXY, right? So we will look in the areas in the near future to see any a possible reduction in the value of the DXY. Why? Because it is now reaching a point whereby we can say that, okay, you know, this is just an area of possibilities where our supply would now exceed our demand, right? So this also confluences with the level where the market has broken from, right? So that's obviously according to Doe's theory, where we see a significant swing low being broken, right? So this area is very significant to us, right? So that means that possibility in the months to come, we should see a further increase in the value of the DXY before we see a reduction in the price, in the value of DXY, right? So that's what we're saying. So we're saying currently we're looking at this area here to take our short positions, right? So we are looking at something like so. Okay, so something like this. So what does this mean to us, right? What does this mean? How does this help us in the long term, right? Well, first and foremost, we can expect, you know, our friends to be doing something like this at the moment, right? So we can expect a lot of sell orders coming into this area right here. And the reason for this is that they're obviously using the 3-touch rule, whereby they have 1, 2, and now they are now receiving the 3rd touch, right? Alternatively, you know, we do have some you know, artists that are doing something like this, whereby you know they are mixing the trend lines here and there, trying to make it fit. All right, so and there are also people looking at this whereby they're saying now, okay, we've had the break of a trend line, so now all they want is basically just a retest of the inner trend line and the outer trend line. So they've got the touch of the outer trend line, so now a lot of sell positions would be coming in at this level, right? So that they can push price to this level to get a retest, to confluence with the support and whatever, or resistance, before they see any further increase in the value of the DXY. But we are saying that the possibilities of a forced liquidation process, whereby whenever they sell orders that are coming into the market, we may just see that push to the upside for liquidity, right? So something like that, right? You guys understand? So that's what we're currently looking at on the DXY. So we're saying, okay, in the days to come, we will see some sort of, in the months to come rather, we will see some further increase in the value of the DXY, right? So let's go down to a weekly time frame, right? So we are saying, okay, if one had to take positions on the DXY, where would we take these positions? So very simply, what we can do is we can simply pull out our flip tool and say, okay, we've formed this double bottom, and let's put it to here, right? There we are. Now we are saying, okay, should there be any reduction in the value of the DXY, we will see it in two possible ways, right? A consolidative phase, and then you'll see the push to the upside, or we may just get a reduction in price, right, to retest the demand zone before we see any further push to the upside, right? So remember, we can get a what do we call it, a correction phase, right, in two ways, either a consolidative phase or a retracement, right? Just depending on how the market performs, right? So that's what we're currently looking at and currently dealing with. So we are saying that yes, we still need to get a further reduction in price of the DXY before we see any significant push to the upside, right? Before we get that. All right. So we are saying that, okay, that in the long term, on a monthly time frame, yes, we are seeing that, you know, we need to get the further increase in the value of DXY. But now we're saying for the weekly time frame and the daily time frame, there needs to be a reduction before we see a push to the upside. Because if you look at it in this way, right, who is to say that this may not form a consolidative phase, right? And we can possibly see the formation of a double top, even though this is not very significant, but it's nice to notice these things, right? It's nice to notice. So that means whichever pairs we are looking at, we can expect some further increase in the value of that pair where the USD is now the quote currency. All right, so we already have our positions in place, right? And this was obviously sent to the team, but we will await for a further increase in the value of the Euro USD before we see a continuation of the Euro USD to the downside. All right, so this is how we will be looking at the Euro USD in the days to come, but I will update you guys on that. Thank you guys for watching.